Manappuram Finance tanks 10% following a weak third quarter. Gold loan growth was weak while gold tonnage is at a 32-quarter low.
Deep cuts in Deepak Nitrite after the third quarter numbers missed estimates on all fronts. The margin contracts nearly 500 basis points. The profit is down by over 50%.
Higher material costs in the third quarter led to an operational miss for Senco Gold. The stock slips nearly 20% as margins contract over 700 basis points in the quarter gone by.
The correction continues in Natco Pharma. The stock falls nearly 10% after falling 20% in yesterday's session after following muted third quarter numbers.
ITC Hotel slips as British American Tobacco says that it will divest its stake in the company by 2026. BAT currently holds about 15% stake in the company.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me yet again is Vinny. Well, Vinny, Nifty has not moved at all, but the real story is in the broader markets, still under pain.
Absolutely. A sharp underperformance today is what we're seeing coming in the mid and small cap. Both are down almost 1%. The mid cap especially is down more than 1% in trade. Yeah. Nigel, yesterday we were thinking green at this point of time. We were seeing that strong performance. Clearly that didn't sustain. And Nifty mid and small cap also, when you look at it, opened up in the green, but again is at the day's lowest point as of now. So clearly not anything exciting. Advanced decline ratio in the favor of declines today. So,
well, that's right. I think the pocket to high today is really the consumption pack. HUL is higher. You have Nestle that's higher. Tata Consumer as well is doing pretty well. So some of the stocks should come up for you. And United Breweries as well was a weakish quarter. And that one as well, after starting off in the red, that's moved into the green. So some of these consumption-related names have done well. But let's focus on Hindalco. They reported a set of numbers that were pretty good, actually. I had a chat earlier today with the managing director, Mr. Satish Pai, and began by asking him about the potential impact of Trump's trade tariffs on the company's business, that is Novelis. Let's listen in to what he had to tell me.
I think I have been on record saying even before that any of these policies on tariffs are a net positive for Novelis, because Novelis is a US company based in the US, and most of these things benefit US companies. So, and for us in Novelis, the metal is a pass-through. So if the Midwest premium goes up, it goes to the ultimate consumer. So on one hand, we can say if the tariffs come in, it's sort of a positive for Novelis. But I also need to remind you that the last time in his previous term, when those tariffs were put in, within a short period of time, the Canadian aluminium tariffs were sort of given an exemption because there is too much dependency on Canadian aluminium for the US consumer. So I guess we'll have to wait and see. But at this stage, we feel there is no negative for Novelis or Hindalco.
Okay, got it. So it's either neutral to positive is what you're clarifying. Thanks a lot for that. Let's focus on the India business and let's start with the aluminium first. You've got a double benefit out there. You're focusing on the cost side. There's a product mix as well that you're focusing on. And input costs, that's been a core focus for you even when times are a little bit jittery. Could you give us a guidance about the EBITDA per ton? How do you see it panning out? This time it was at around $1,450 per ton. Can you hold on to these levels or should we be working with a couple of $100 lower?
No, I think that I'm quite confident that even in the fourth quarter that we are halfway through, we will be holding on to that levels of EBITDA per ton because the LME is holding at 2,600 roundabouts. We keep our, as you said, a very tight control on costs. Power costs, coal costs are holding flat. So I think net operations are very stable. The margins should hold into Q4. Quite confident of that.
Okay, that will be music to the ears of your investors and so good news out there. Let's take into account then the problem point, that is Novelis. It went down to around $406 per ton. But you all have said quarter four's EBITDA per ton will look something like quarter two, which would mean that you'll be closer to around the $500 per ton mark. I want to re-ask you this, Mr. Pai. Are you sure that it's going to be, that kind of a bounce back that we see? Quarter four being as good as quarter two, or could there be some kind of one-offs or something that could disrupt this? How sure are you?
Well, the one-offs we can never predict, but we are quite confident because Q4 is normally a very strong quarter for us. I have to remind you that Q3 is a holiday quarter in the Western world, Thanksgiving, New Year, Christmas. We take our annual shutdown. So if you see the volumes had dropped down to 901 KT, that will jump back to 950, 960 in Q4. So getting 50, 60 KT of additional volume, that itself will bring the EBITDA back to the Q2 level. So fairly confident about that.
That's good news. And do you maintain your longer term guidance that, as your capacities come on stream, which will give you better EBITDA per ton? Your longer term guidance for Novelis is the EBITDA per ton moves to around $600 per ton. Is that maintained?
Yes, we have, I think even on our Novelis analyst call, we reaffirmed our commitment to get to that $600 per ton. And, quite a few efforts going on in reducing costs, improving efficiencies, working around different levels of scrap to mitigate the impact of the scrap spreads tightening. So, the new pricing is also kicking in 1st January of this year. So, yes, we are quite confident that we will be getting to those levels of $600 per ton.
Okay, let's focus on the steady business, the copper business. In the last few years, we've seen it move 500 to 600 crores per quarter to 700 crores per quarter. And this time as well, it was better actually than what the street was working with. Quarterly run rate, what should the copper EBITDA look like?
So look, this quarter first, it was better than what the street was expecting because sulfuric acid prices were better than what we expected. So the copper chain is quite a varied chain. So you have gold, silver, sulfuric acid, and as well as downstream copper products. So I think that in Q4, it should be around the 600 to 650 mark because you have to remember now the new TCRCs will start to kick in. Whereas in the first quarter, we still have inventory that we will go through. But TCRCs are down dramatically at 5 cents per pound compared to 15, 16 that we had in Q3. So that will be a little bit of a dampener, but otherwise copper demand is strong. The value chain of gold, silver, sulfuric acid continues well. So it should be around 650 crores in Q4.
Okay, all right. Before we wind down, then tell us what is the outlook with regard to CAPEX? How much will you all be spending in FY26? And what does it mean for the debt number? On expected lines, it went up marginally because of the CAPEX that you're doing in Novelis. But what's the number you're looking at?
So this year we will be finishing at around 6,000 crores. As we have already announced a fairly aggressive CAPEX plan of nearly 40,000 crores over the next 3 years. So in FY26, our CAPEX guidance will be more like 8,000 crores. And in FY27, it will probably go higher than that because we'll be putting in a new aluminium smelter expansion, a new alumina refinery, a copper smelter. So fairly aggressive CAPEX plan of 40,000 crores over the next 3 to 4 years.
Okay, all right. So what does it mean for the debt number then? It's holding at around 41,000 crores, but you're throwing up a lot of cash as well. And as you said, some backward integration is helping you. So I wanted two numbers from you. Cost of production will go down, I'm guessing, because your coal sourcing will be coming in captively. So what could the savings be on that? And if you could help us out with an absolute debt number.
So the absolute debt number, you see, the net debt to EBITDA in India is negative. That means we have positive cash. In FY26, it will remain around that zero mark. So I don't think we'll have any residual net debt in the India business. Our estimation is that in FY28, probably the net debt to EBITDA in India will go to about 1 to 1.5 because that will be the peak CAPEX time. So the one way to look at it is that the consolidated net debt to EBITDA in Hindalco will probably at the peak of the CAPEX get closer to 2, but that's about it. Otherwise, it should remain well below 2.
Okay, surely that is Hindalco's management talking to us. As of now, the stock is quite flattish in trade. But on that note, we're going to step into a very short break. Don't go anywhere. We'll be back with more updates on the market after this break.
Welcome back. Unlike what we saw in the last couple of days during Chartbusters, where the markets were actually at the high point of the day, as we speak, the markets have slipped into the red, and a few stocks have come in for some big selling. So I don't know whether it's someone who's pressing the sell button very, very aggressively. But just in the last 15 minutes, BEL has moved to the low point of the day. IndusInd Bank has seen some selling. You have Shriram Finance as well. Massive selling is what we've seen out there. And Tata Steel is the other one that's seen a lot of selling. So keep an eye out on a few of these names. Massive selling is what we have seen. The Nifty Bank calls as well is now down close to around 0.6%. And that's been the one that underperformed yesterday as well. So now I think the Nifty Bank is around 250 points away from that crucial support level of around 48,800 odd. That said, let's talk about stocks that are doing well. Anupam Rasayan, that one has reported a solid set of numbers. The margins have expanded by around 500 basis points. To understand what's the way ahead, we're joined by Mr. Vishal Thakkar, the Deputy CFO at the company. Hi, Mr. Thakkar. Good morning and good to see you. What's the way ahead? What kind of revenue growth do you end this year with? And margins, what should the broadband be?
Yeah, so Nigel, thank you for taking us on your channel. Yes, the recovery has been good. We have been able to see a good growth. And we expect that the Q4, the growth will continue, largely on account of pharma, polymer, and agrochem coming back. So we see a good growth in Q4 as well. Margins, yes, this quarter has been significantly higher. I would continue to guide anything in the 26 to 28% band on an average is where I would try and guide it, because there were a couple of products which were high margin products which has a higher balance in this quarter. But on an annual basis, you will see numbers to be more the range of 26 to 28%.
Okay, 26 to 28% in terms of margins. You're saying the revenue growth is also expected to sustain in Q4. I want to know for the full year FY25, I think, 9-month period when I'm looking at the revenues, they're seeing a decline of 13%. So by the end of FY25, what is the number that we should watch out for in terms of revenue growth combining the whole year?
If you look at the whole year, probably we'll be in the flattish side, because the Q4 will give you a good numbers, but my H1 was a little weaker compared to the H2. So I would try and say it will be around about a flattish on a console basis.
Okay, flattish growth. So maybe 1% or so is something that we could see. And agrochemical, you did say it's seeing signs of recovery. Could you tell us overall, is this continuing in Q4 as well, the recovery? Is it persisting? And what are the volumes here? Anything you could indicate on that front?
So if you see the price wise, it has been a flattish because the input costs have been pretty much stable. So the volume, the uptake that you see in the revenue is largely on the base of volume, and we expect it to increase the growth to increase in Q4 and continue that momentum in FY26 as well. So all in all, I think agrochem is expected to deliver a good recovery to my mind.
Okay, good recovery that you're seeing in agrochem. You're sticking to your margin guidance of 26 to 28% for FY25. FY26, what are you expecting there? Recovery from, if you're seeing a recovery coming in agrochemicals, pharma, polymers continues to do well. What are we expecting in terms of growth in FY26 from the company?
So FY26, if you see our commentary that we have given in the past as well, we expect that FY26 should be a good growth year. We would expect anything about 30-35% plus growth that we should see, which historically also, if you see in past, barring a couple of years, we have been able to deliver that kind of a growth. So we expect that to be there and margin to be stable. I would not want to guide a higher margin as of now, but yeah, it will be in the stable range.
Yeah, being conservative is not such a bad thing. As you're saying, we should stick to that band of around 26 to around 28%. Now, this is the third quarter. And don't give out your working capital cycle, but I recall that it had got elevated in the first half of the year and you were guiding that it comes down. So is that on track by the end of this year? Where do you see the working capital cycle stabilize at, and what is the ultimate target?
So see, I think as we have been historically also guiding, the ultimate is what we have said, around about 180 to 200 days eventually. But this quarter, this year, we would be more on the flattish side or improvement of it. And I would not want to give a specific guidance for this year or next year. I would wait for the balance sheet numbers to come out when I would guide that. But yeah, we would be watching that number very closely, and we would expect it to be more stabilized over the medium term.
Right. And Mr. Thakkar, your order book surely is at around that 9,000 crore where we are seeing. Could you just talk to us about execution timelines for these orders? And also, you're seeing an increase in those letter of intents coming in, but conversion to the revenue seems to be a bit slower. So could you indicate that as well?
I'll take 30 seconds more for this answer because I need to give a background to that. Typically, when you sign an LOI, it takes you around about 18 to 24 months, plus or minus 6 months to really convert it into commercialization. And then it takes you another couple of years, 2 to 3 years to really get to the ramp up of the full volume. So what numbers that you see is are the full volume numbers, right? And so that's the backdrop that we should be seeing it. And if you look at whatever we had signed in 2022, we have commercialized it and they are ramping up. So today we would have commercialized around about 3,100 crores worth of LOIs and contracts that we would have commercialized. Yes, also we have signed one LOI and one contract recently, which we have announced yesterday. If you look at those two are expected to be commercialized starting CY25. So practically FY26 is when you will see those numbers as well. And we expect that significant number of other LOIs which we have signed in 2023 and 2024 are also expected to be commercialized in 2026. And probably a quarter or two and a year or two, and you will see the full wrap up of that as well. And so, to me, the numbers look in track. Maybe a couple of quarters plus or minus can be there, but overall it looks on track.
Okay, Mr. Thakkar, thank you so much for joining in with us, giving us an understanding in terms of the outlook of the company in FY25, Q4, as well as FY26. It's a pleasure having you on the show. But on that note, we're going to step into a very short break. We'll get you more updates on the market and stock-specific action after the break. Welcome back and thanks for staying tuned to Chartbusters on CNBC-TV18. Markets not doing anything pretty. 22,900 is what the Nifty is just managing to hold on to, almost near the day's lowest point. Bank names, they are under pressure as well. So HDFC Bank, Kotak Bank among the top drags coming in for the Nifty 50. And Nifty Bank too is down almost 0.6% in trade. Nothing exciting coming in.
Well, that's right. Two levels that I'm looking at on the Nifty. That 48,800 mark is important because we went to that level numerous times and we bounced from there. And the second level is on the Nifty, which is 22,750, which is the double bottom that we formed. So those are the crucial levels. Well, we'll wrap up on this edition of Chartbusters. Don't go anywhere. The team of Trading Hour takes all the action forward.